All right, good deal. Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman, founder and CEO of Equity Group and Appelman Properties. Today we're joined with Max J. Max is an accomplished real estate investor and founder of Roth Capital. Based in Panama Beach, Florida, he has been a prominent figure in the industry since 2014 as a general partner and with an impressive portfolio of over 500 properties. Max, we're excited to have you here with us. I know that your video is not on because you're driving, but we definitely want to have a conversation. If you could, just let the listeners know a little bit more about yourself.
Yes, so how's it going, guys? I'm Max Shah. I'm from Panama City Beach. Originally, I'm from India. Grew up there. Went to high school over here in California. Went to a few schools around here. Graduated from Northwestern in Chicago with a bachelor's in IT. Worked with Microsoft for a few years, but then family had different plans. So I moved to Texas to take care of the grandma and started buying real estate ever since.
Nice, very cool. You started definitely with humble beginnings and have built your real estate portfolio up to something that's massive. What are some reasons to be involved with multifamily real estate versus say single family rentals?
So I started with a single family rentals first and a hotel that I was running, but it's just to the point that you cannot manage all of them at once, or it gets harder and harder and more difficult to manage them. And they are not in single locations. I didn't have them in single locations. I had it throughout different towns. So it was just too much time consuming, and as well as the returns were not as solid as multifamily. So if people I want to scale up, multifamily or the commercial is a way to scale up in real estate. Returns are way higher too.
Yep, with single family, you've got more roofs to maintain and more maintenance calls and the returns. If you've got equity or economies of scale with more roofs essentially under one roof, more units, your maintenance cost goes down and you compile. You can get one maintenance tech out there to manage 40 units versus house to house to house. I totally agree and get that. So with real estate, with the bigger properties, you've got active investors who are in the deal. They're actively managing it. They're making sure that the property is performing, making sure that the returns are coming in, the expenses are managed and maintained. Can you give us some differences between active and passive multifamily investing?
So I started as a active investors. I'm just gonna talk about a little bit of my experience in here, that so listeners can have a better idea of what we're talking about. So I started as an active investors, right? So active as a multifamily as well. There's a lot of work to be done. There's a lot of team players you gotta connect to, a lot of partners you have to work with for the little returns. So then I started looking into the passive investments. My goal is to retire in 5 years, and the passive is the way for me. It could be different for anybody else. For active, if you want to stay active on a deal, you want to perform some due diligence, raise capital, or underwrite the deals, by all means, active is the best for you. But if you just want to lay back, retire sooner, learn stuff about active side, but you could invest as a passive. That way you don't have to worry about any tenant calls or any lease dues and stuff like that.
I totally agree. So you can still get into real estate, you can still get your depreciation, you can still get your cash flow, your appreciation, your debt pay down, and not have to actively manage anything. You've put people in front of you. It's
Especially if you have W-2s, or if you are in the medical fields or other fields that takes most of your time, passive is the way for them. I'm a real estate investor from long time, so I do both active and passive.
and that's that way you can still concentrate on your job, what gives you passion, and at the same time you're creating generational wealth through passively investing into the properties alongside your operators, the guys that are operating the project.
Definitely. It just gives you the extra income that you can't get on your own on the real estate side.
That and hedging and keeping more of your in cash, because you can use the depreciation against your earnings as well.
Exactly.
And, There's totally agree. How did you get started with investing again? What was the key moment that got you into real estate?
So my key moment was when ever since I was in the universities and schools, I was working at the hotel to pay my bills, right? To pay for my school. I didn't have student loans and stuff like that. But as soon as I started working at Microsoft, I spent about a year and a half there. Then I moved to Texas when my grandma was sick, so I took care of her. At the same time, I started buying a hotel. I bought a first hotel, middle of nowhere in Texas. Didn't turn out to be good deals at all. But I still powered through it and I repurposed the property and sold it to the truck stop. And I got out there in less than a year, doubling my money
That's
effectively. Then I bought some more in hotels in Pensacola when they had a BP oil spill happen. Did the same thing. Property was closed down, almost foreclosed by the bank. Took over, ran the operations myself, 100 hours a week, open to close both properties, fixed the rooms up, jacked up the revenue, get the forced appreciation, stuff like that done, refinance the property, got my money out what I put it in there. Then I just ran it until I got some settlement money from BP and we sold that properties too.
wow.
I was just flipping, like basically I was just a big commercial flipper if you want to say like that. Buying a property, fixing it up, add value stuff to it, force appreciate a little bit. That's the beauty of commercial investments. You could increase the NOI and potentially increasing your property value by tenfold.
That's incredible. So you essentially took a distressed property and you turned it from distressed, failing, foreclosed on to producing cash flow. And I like your term, jacked up the revenue. And I'd say it's a well-deserved term because you had to work 100 plus hours a week. And then you, at the same time, you've got a settlement from BP. Was that a strategy going in? Did you know that that was going to happen, or was it just like icing on the cake?
No, that was just the icing on the cake. We didn't have any information about it at all. I ran the property 2 years, and after 2 years, a lot of hoteliers and people around here started gathering together, started talking to each other and lawyers and see what they can do to get some revenue back from the business they got killed by the oil spill. So I got a property cheaper because the business wasn't there. But then I started cash flowing and settlement money was just icing on the cake. But it took them 4 years to get that money out to us.
That's incredible. That's a great. I guess you're still in your start when you were you cashed out on your Texas hotel and then you went and bought another one. So it's still in your journey getting there. What? How did you identify the properties, and then how could you tell that it was a deal that you wanted to pursue?
So I look at basically my specialty is distressed properties. So after the property I bought in Texas, when I was getting a loan on it, the local bank here had a few closed down gas stations over here. And they wanted to get rid of them from the books. So I asked them, well, they reached out to me and said, if you want to take over the stations, we get you better deals on stuff, on your loans and terms on those. So my original plan was to go to Texas and run the property, but then I had to scratch that plan and get some partners involved running that hotel in Texas for me. Then I bought one station in 2019 without knowing any business in gas station side at all, completely. And that turned out to be, that time was a really bad move, but now it's the best move I ever made because I took over the gas station. There were 20 different owners in 20 years before me came in. They all failed. I came in, did what we need to do, got involved in the community, started doing some charity work too, which is just common sense. If you are in a small community, you are surrounded by people, nice people.
Yeah.
And those are your family, and because you're gonna see them every day.
And so they wanted to help support you in your endeavor.
Exactly. So I like to support some small communities too. We did a bunch of donations on hurricane time in 2018 here. We did a bunch of stuff in COVID times that I like to do charity work because this comes from my heart. I don't take off. I don't take those off my taxes either. I don't even report them in my taxes because that just defeats the purpose of charity work, to me at least. If I'm gonna take a tax break, that means I'm doing something for my own benefit.
Yeah. That's just showing up and giving back and just helping others in need. Totally agree.
So that station today, I'm still running that one. And it just appraised at 2.9 and I bought it at 750
Oh,
years or
wow.
4 years ago.
That's substantial. That's incredible. Are you planning on holding that forever, or is
So
there a horizon?
so there is a story on that too. So after the station, I bought a second one in 2021 in March, nearby 15 miles away. I ran it myself, open to close, 100 hours a week, got the business going where it was supposed to be. Then I had the change, family situation changed. I had a newborn child, first one 10 months ago. Then my dad passed away and stuff like that. So it was just way too much for me to work. So I changed my strategies a little bit more and I sold the second station that I bought. I bought that second one for 625, sold it in last October of 2022 for 1.35.
Nice.
And then I started looking into multifamily. And that's the whole starting point for my journey in multifamily was in last October. I wanted to retire and spend more time with my family because growing up, my dad wasn't there. Not because he didn't want to be there. He was just too busy making money and providing food and stuff for us. And I want to make sure that I'll be there for my kid. So I changed my strategies, looked up some passive deals in multifamily, invested in one or two, started learning about multifamily and commercial real estate in general, besides the hotel and gas station. And I like the return solid, even better than what I was getting in stations and stuff like that. And you could do so much stuff in multifamily with, and you don't have to know everything. You could have partners knowing some stuff and you know other stuff, and you can get together and close some deals together.
Yeah, I think that's the biggest piece to multifamily is that you don't have to go it alone. It's a big multifamily. You can bring in. There's enough margin there to bring in true professionals to get it to run properly, like a true business, and everyone benefits along the way. And the possibilities are endless. You can go from state to state, or region to region, and grow a portfolio with big groups of people.
Exactly.
And steady cash flow and investment returns that you can predict and count on it. And at the end of the day, it's still brick and mortar. You can still go out, see, feel, and touch multifamily real estate versus, say, the stock market where you're looking at a digital screen, and some days it's green, some days it's red.
Exactly.
It's
That's the whole reason I don't have a single dollar in the stock market right now.
Yeah, and unfortunately, a lot of people do, and it's you're trusting the guidance of people in front of you that are investing based on their knowledge of where to put their money in the stock market, different stocks. But ultimately, you can't feel or touch them. It's just you got to trust people. But
It's just
so yeah, so networking is absolutely huge, and really any industry, but especially on real estate. Can you just give us some just nuggets and carrots on how you network and how you get the word out in order for you to invest in multifamily and find deals?
So especially in multifamily and commercial side, the who you know is what's gonna be more important than what you do. You could do a lot of stuff, but if you don't know much about people, you're not gonna have deals coming to you, or you're gonna have crappy deals coming to you. So I started learning and listening to podcasts and stuff like that, and everybody was saying the same thing: network with as many people as you can, go to as many events you can go to. So I started calling investors, brokers, and property owners and stuff like that in general from last October. From last October, as of yesterday, I made 1,600 calls to different
Nice.
people, and I'm in repeated calls with at least 400 out of 1,600 people. So it's the matter of who you hang out with is what you're gonna become. So I try to hang out with the people, not people that has more knowledge than I do. so I could learn from them. The knowledge will trickle down on me. So networking is the biggest key asset or aspect, our biggest key important of the multifamily side of the business for sure.
Yeah, I totally agree. If people don't know what you're doing, they don't know what you're looking for, or just even that you're in the business, it's hard to get into the room. Um, Once you start meeting key contacts, people like yourself that have been in the industry, and now I can capitalize off of your experiences. Now Max is adding to say my experience level. I can bring X amount, but Max has already experienced this. You kind of save each other from different encounters, but you can also leverage your network and take down bigger deals. Now Max has people that he knows. Josh has got people he knows. And now the network effect takes over.
Exactly. And that's how you're gonna meet your future partners. So you'll be surprised how many people are in multifamily side until you start looking for the stuff. That's like my two doors neighbor. He was investing in multifamily for a long time. I didn't know about it until I started talking to people, and I found him in different groups. And I'm like, I know you. You're my neighbor. He's like, yep. So
That's huge. And now you can help him invest and expand his portfolio. That's
exactly.
now, Max, do you have experience with people that have 1031s as well?
Yes, we do. And that's actually the biggest, that's one of the ways people just defer their taxes down the road, or or we will say in our language, kick the cans down the road. So basically what 1031 exchange is that if you have some property or real estate, if you want to sell and exchange for a bigger property without paying any taxes or capital gain taxes, you could do so. But you gotta identify property in 30 days or so on, 3 of them, and close on it on 180 days for the actual amount or a higher amount of your current property. That's how rich people avoid paying property capital gain taxes on real estate, and that's how they kick the can down the road until they are gone from this world, and cycle repeats with the kids.
Yeah, that's defer, and then die. Is you basically just keep deferring. It's a strategy that's put in place that it's not a secret. You can find these anywhere in books and even write tax advice. But deferring is a way to build wealth and keep wealth. I mean, is that correct? Max, I think you went on mute here.
Especially with the property, if you have it in a trust, and down the road, if you, for instance, something happens to you, the property will be passed down to your beneficiary on step-based capital gain taxes. So they will not own any capital gain taxes up what you deferred until the at current value of the property. From there, cycle repeats from zero for them.
So you're able to help somebody who just sold their property or is wanting to sell their property and take the profit from this property, not pay taxes on it, and invest that into a new property, bigger property. Is that correct?
Yep. So basically, just snowball effect. Buy a bigger property, bigger and bigger. You could buy up to 3 properties with the same 1031 exchange, as long as the value is going to be higher than your current property is. So you could buy multiple properties too, and you could
Nice.
expand the portfolio.
And that's a huge strategy to take advantage of.
Yep.
But Max, definitely appreciate your time today. If somebody wants to get a hold of you and discuss 1031s or discuss investing or just discuss your journey in real estate, how can they get a hold of you?
They could look me up on Facebook. I got my phone number too, which would be, I guess you're gonna post it over there too.
Yes, for
And
sure.
I got my emails too, and I got my website too, rosinvestment.com.
Awesome. Awesome. We definitely appreciate your time. Look forward to speaking to you here in the future and watching your journey.
Sounds good to me, man. I'm looking forward to meeting a lot more new people.
Yes, sir. All right, Max, you take it easy.
Thank you so much for the opportunity. I hope you
Thank
have
you.
a great day. Yep.
You too. Bye.